Traders checking in on the stock market today. Bulls out in full force after a 3% drop in the financial sector yesterday. We had a 3% bounce today, and fear very quickly alleviated with some huge moves out there in a lot of individual names. Is that the end of our consolidation? We have some previous historical examples to look at from the very recent past that can help us gauge the answer to that question, and tomorrow is going to be fairly telling as to whether or not the bears are able to counteract the significant bounce that we've seen today or not. So before we get into the technical analysis and some trade review, I'm going to be going over AMC and Mrna trades today. I just want to address the fact that I know a lot of you are watching me consistently, and I know I come on here every day and I talk about my winning trades, and maybe I point out a break-even trade every now and again. And I just want to address the fact that, number one, I know that seems suspect because 2 or 3 years ago, myself being an 8-year experienced trader, watching the videos that I've been making over the last few months, I would be calling BS. There's no way you can be that consistent on a daily basis. I didn't think this was possible. I didn't think it could be this easy. But I also don't want to frustrate people who are learning trading in year 1, 2, 3, 4, 5 and going through the frustration and the red week and the red day and the red month, and then watching me saying or showing, look how easy this is, because obviously that's not the case. And again, you're watching 11 years in the making, and it's not just 11 years, it's 6 years of learning to trade, and then the last 5 years since starting the chart, guys, is a level of time commitment that 98% of people can't put in. I don't have a wife and children for a reason. It's because charts and the chart guys and trading is the top priority in my life. And that won't always be the case, but it's been the case for the last 5 years. So again, I don't want people to get frustrated and think that they should be on this level, because this is a level that I didn't think was possible. I'm on a streak the last 12 months where I just can't lose. And I know it's not going to last. My trading style has been smashing hype runs and knowing to sell into euphoria. I did that in marijuana penny stocks. I did that in Canadian MJ. I did that in crypto twice now. And that's a boom and bust where, I make a bunch of money in a period of time and then I just try and don't lose it while I wait for the next euphoria cycle. That's different this last year. This last year, I'm just consistently making money on a daily basis in a way that, again, I didn't think was really that possible, and doing it with an ease that I didn't think was possible. So I'm very grateful to be in that place right now. And just as an example, the last 15 days of trading, I put out maybe 12 of these videos in those last 15 days. I'm green 14 of those days, and the one red day was a quarter day loser. So I want to have more red days to talk about the mistakes and the losing trades. But again, it's just 11 years in to get to this point. So if you're on year 1, 2, 3, 4, 5, 6, 7, 8, it's just, ideally I want this to be motivation to stick with it, because this is possible for people to achieve. And for time, you can't replace time. It's just, it has to be years of experience. You can speed things up and slow things down based on how much time you're putting in, based on whether you got a mentor, based on all those aspects, but you can't substitute time and experiences and learning all these lessons and going through it thousands of times. Again, I have done what I'm doing right now in terms of my daily review, in terms of my trading for 6+ hours today, more than that. I traded the entire day, and I've done that thousands of times, literally thousands of times. So that's all I want to say about that. Feel free to ask any questions about it. I'm due for an AMA, and I'll do a live YouTube stream, AMA style, where you can ask me any of these questions, because again, it's such a long journey. And like anything, if I'm 3 years into playing basketball and I play against someone who's been playing for 11 years, they are going to whoop me and make it look easy, because there's no substitute for time and experience. So looking at the S&P 500, we've got a massive bounce. Today was the best case scenario for bulls, absolute best case scenario. So I swung a ton of positions into today, and I exited a lot of them. I'll wait till the end of the video to go over the specific trades, but the bulls followed through in a big way. And we are now watching for SPY. Again, we have recent examples. Look at this drop. The 2 drops that we've had recently, wrong button. We had a drop of, that's the wrong button. I'm out of my flow because I don't start videos with a monologue. So we've got a 4.5% drop, and then we've got a 2.5% drop, and this time around, we've got a 3.8% drop. So roughly in the middle of that. The bigger drop required a daily trend change to get back to an all-time high. It was a big enough bounce. It was a 50% plus retracement on the bounce to create the space for the daily high or low, to confirm the daily trend change, and then we're back at all-time highs. The last time this drop happened, it was small enough that the bulls could just V-shape to that new all-time high. So here we are, and I'm anticipating initially a lower high compared to the all-time high as the most likely scenario, but we have already bounced, at this point, 50% plus retracement. So that is the bulls creating the space for a daily high or low to try and form once we top out. And in the video yesterday, I talked about the importance of confirming the daily downtrend for bears to prove anything. These moves are bulls getting complacent, and then they get sucker punched by the bears. And then they get their wits about them after being stunned a little bit and say, okay, we're ready for the bears now, and we completely recover back to the all-time highs. So this is the bears punching the bulls in the face by surprise. And now, this is what the bulls can do now that they're ready for a fight. So the question is, do we see a V-shape to an all-time high? Do we see a daily lower high and tightening range? Or do we see a lower high and lower low? That lower high and lower low will not happen without a very notable amount of bear volume, because it's the less likely scenario at this point because we have bounced significantly. It's possible, absolutely, but it will have to see bear volume that is a good bit over the 20-day average if we are going to drop to the lower low. That support level, the low of yesterday, is now the support level for the next 2 weeks. We're heading into tech sector earnings. Netflix just responded, it's flat. So Netflix, no reaction. And we're going to be watching all the major tech names next week and probably some more the week after as far as what the reaction is going to be. But if this low holds, it's a simple statement. If 421.97 holds, the bulls keep their complete control, because you have to punch the bears in the face, bulls in the face, surprise them, and then win the fight when they're ready for you. And that shows follow through. And again, we just haven't seen that in a while. We did it back here. We did it in February with our bounce, notable bounce, drop to a lower low. And again, for that lower low to happen, look at what the volume did. A massive ramp up in bear volume, but it was just a weekly high or low. So here we are bouncing off of weekly EMA 12. We have 3 more trading days to go in the week, so we have to see how it shapes up. But this is the support level it's been holding for 7 months. And if that low of this week holds, we're going to hold it again for yet another week. So that's going to be our short-term guide as well. We have an hourly uptrend to be watching on SPY, where anything, the low of today was the hourly, high or low. And now anything over 424.83 is another hourly high or low. Any name that is scouting a daily lower high to be set has to see a loss of the hourly uptrend for a daily lower high to be set. So QQQ, same thing. Look at the weekly chart. I talked all about that weekly chart on XLV and QQQ in yesterday's video, saying there are 0 red flags whatsoever on this weekly chart for QQQ. The bears have way more proving to do if there's going to be any red flag here. It's a weekly bull flag right now. If we have a bearish reaction to Facebook, Google, Amazon, Apple, Microsoft earnings, then we're going to pull back more, still looking for a weekly high or low compared to 316, but the odds of a bull flag will decrease. If we have a bullish reaction to these names' earnings, the bull flag is going to confirm, and we're going to see new all-time highs again. So it's just a lot of frustrated bears, but make the bears prove it. A drop is great, but that's how complacency ends. It ends fast and hard. And again, it's then the bulls are ready for it. So on the size of this bounce, now it's over 50% retracement, can we drop and break to a lower low? If 352 support breaks this week, that will be very notable to me for bears proving follow through. We're running low on storage space. It's probably time for that new computer. And that's when I'll have my first red month in a while. So, hourly uptrend on QQQ. I would call anything above the low of the day an hourly high or low. There was weakness in the first 10 minutes of QQQ, 5-minute equilibrium, and then the bulls had complete control from that point forward. A little bit of sell-off into the end of the day, but we were due for hourly consolidation. So we're watching QQQ and SPY for the potential of daily lower highs tomorrow, but we're watching the hourly uptrends as our guides. IWM, massive bounce follow through, plenty of space for a daily higher low to form. Again, I would have said there's space for a daily higher low this last bounce, but what happened? Increasing bear volume. So once we top out and lose the hourly uptrend, I'm going to call anything under 226.89 a daily lower high. We're scouting a daily lower high in IWM, but the bulls then have space for a daily higher low to try and form to try and set up a daily trend change. The burden of proof is on the bulls on a chart like this to have to regain the daily trend change to put a stop to this daily downtrend over the last few weeks. But the burden of proof on SPY and QQQ is definitely still on the bears because of their weekly charts holding on just fine at this point. XLF, massive bounce. 3% drop yesterday, and today we had a 3% bounce. So we've got a break of 35.18 with a lack of follow through at this point. So what's that? It's a confirmed weekly downtrend with a lack of follow through at this point. So what's that? It's a potential monthly bull flag. I'm not saying it's a monthly bull flag because I need a daily trend change back to the bulls. But if from here, XLF bulls confirm a daily trend change, the probability needle of is this a monthly bull flag or not will increase to more probable if we change the daily trend. Just right now in the short term, I am scouting a daily lower high, anything under 37.14. And again, this is where newer traders get confused because we're scouting a monthly high or low, absolutely, but we're scouting a daily lower high. We're anticipating most likely scenarios to be different depending on what time frame we're looking at. And once I understood that as a trader, huge level up. Once I started publicly sharing and interacting with people and giving my technical analysis, huge level up. There's many different huge level ups that you can take as a trader. Interacting with a friend and talking about it on a daily basis, huge level up. So we're scouting a daily lower high on XLF, anything under 37.14. When we lose the hourly uptrend, that daily lower high is set, and then it's up to the bulls to confirm a daily trend change to try and have it be a weekly bear break with zero follow through. Tomorrow's a big day. If we see a solid red day tomorrow, we're going to say, okay, maybe we can break our recent lows. Maybe the bears can prove something. But if we have a green day tomorrow, we're going to be way above the lows of yesterday, and the bulls will regain a good bit of confidence. XLV, all-time high. Well, no, double top, but tested the all-time high. Double top by 5 pennies. Weekly bull flag trying to confirm. Weekly EMA 12. No red flags on this chart whatsoever, and this sector is the second largest holdings in the in SPY. So we're still in an hourly uptrend. If we lose the hourly uptrend, that double top will be notable. But again, it's the low of yesterday. For everybody, that low of yesterday is now the support level to be watching for the next couple weeks. Because we would have to reject from the all-time high and break that support for us to say, whoa, that's a real hard rejection. Bears are really proving it. But if we get a new all-time high, the weekly remains very strong. Biotech sector, double bottom, double top the last 3 days, bull break, strong close. We're scouting weekly higher lows in growth names. Low, high. Is this our weekly higher low? It's probably a weekly inside bar. We've got another 3 trading days to go, so that may be a bit premature of a call. Hourly uptrend is our guide. Anything above 126.57 is an hourly higher low. When we lose the hourly uptrend, we watch for daily consolidation, and we watch for the bulls to try and form a daily higher low compared to the recent low. The bulls have to confirm a daily trend change on growth names to be looking for weekly higher lows to be set. And again, just as comparisons, NIO, we're watching for the same thing. Is this a weekly higher low? Maybe. Change the daily trend to prove it. Who else we got? TAN, what's TAN doing? Is that our weekly higher low? Maybe. We need a daily trend change. You get the idea. ARC, same deal. Could be our weekly higher low. We need to top out on this bounce and confirm a daily trend change. SMH, decent bounce. It's not a 50% retracement at this point. Could this be a bear flag? It's still possible. So again, we need to pull up our fib tools if we can't gauge by eye The way that my eye does this at this point is just, I can pinpoint where half of this range is. Just by looking, I know halfway is right about there. And it's not exact, it's not a science, but I can say we're not halfway yet. And if we get over halfway, I can say we're more than halfway. And again, that just shifts the probability. Potential bear flag into likely daily high or low. So if this is our top, it's a potential daily bear flag. If we see another green day tomorrow, we then create the space for a daily high or low to try and form. So bulls do want more bounce follow through here, and you can see the QQQ bounce is definitely more notable than the SMH bounce at this point. So tan, same deal, this bounce, not convincing just yet, need more follow through to get back to the 50% retracement to create the space to try and set up a daily trend change to try and set a weekly high or low. So bulls have more proving to do on these growth names. And today was the Apple show as far as QQQ was concerned. Apple and Google and Facebook, but Apple really stood out as a big-time lead bull. And again, as I've said many times, that's the most important stock in the market, in my opinion, as holdings of all these ETFs, and really just puts a lot of weight on Apple. It shifts, but that's been the case for a while. MSOS, weak bounce. Lots more follow-through needed. Again, retracement, not even close to 382. Even if we have a green day tomorrow, we could reject from 382 retracement and stay a potential daily bear flag. So I do still have some MSOS position, but it's on the chopping block. I didn't want to sell it in daily oversold conditions because daily oversold in 2021 tells us we're about to bounce. And that's been a very consistent theme. But I know a daily lower high is the most likely scenario here, and I am going to at least exit half of my position into a daily lower high because the bulls did not prove it to me as far as setting monthly higher lows. And I'm going to be talking about, in the crypto video tomorrow, I'm going to be talking about the significant correlation that USMJ has to the cryptocurrency space. The VIX, big drop, held the low of yesterday, but obviously not a whole lot of follow through. It was a good 2 days, but we lost the hourly uptrend, and we confirmed an hourly downtrend today. So weekly perspective, potentially just another week with a big upper wick, but I would anticipate that upper wick's not going to be that big because, again, I'm anticipating daily lower highs to be set. What I want to see tomorrow, I started today with no clarity because we saw higher opens, and that led for me to sell. I was selling pre-market. I was selling TLRY pre-market because it was setting up for a gap up. I sold NIO a good bit pre-market. I sold half my NVDA. So it was showing me gap up open, and that had clarity. But as soon as the morning started, I had no edge. I did not know what direction we were going for most things, and that just told me don't trade, be patient. And then the trades presented themselves to me as far as clear setups that I do understand in the middle of the day. But if I want the ideal day tomorrow, I want gap up opens on everything. Gap up on names that are scouting daily lower highs. So look at the reopening travel names. Absolutely crushed into way extreme levels, and now a very nice bounce. At this point, we bounced 6% in 2 days, and we didn't consolidate on the hourly today. So this is the airline ETF. I want to gap up open tomorrow. I want to gap up open right into daily EMA 12 for me to be scouting a bearish entry. Even if it's just looking for an hourly high or low, that will give me enough consolidation to manage my trade and have limited risk where, if I aggressively short and then we pull back a little bit, I know an hourly high or low is coming. I exit half. I put my stop above the high. If that's our daily lower high, I nail it. If it's not, I stop out for very small risk. And it's the cruises doing the same thing. So I know that's a setup I'll be watching for. If we don't gap up open tomorrow, then I don't take that trade because a lower open, we're just looking for an hourly high or low. Forget where that rank came from. Dollar, 12-hour rising wedge still in play. We keep breaking the higher highs, but we're not seeing follow through. So again, we're scouting a weekly lower high, anything under 93.44. I do believe this is a rising wedge, but the bears aren't proving anything. So I need to see a loss of, at this point, 92.63 would prove to me that this pattern is breaking bear. Gold, 4-hour tightening range, just viewing this as a drop, high of the bounce, scouting a higher low, so potential 4-hour equilibrium. If the equilibrium breaks bear, the daily uptrend is at risk and our weekly lower high will likely be set. If the 4-hour equilibrium breaks bull, we're looking right back at that recent high and our weekly lower high has not been set. How this 4-hour equilibrium breaks probably will have to do with whether or not that dollar 12-hour rising wedge confirms or not. Silver is all bear. And just following through, 4-hour bear flag, dropping the lower lows, new resistance is 25.28. It is way weaker than gold, yet again. And again, at this point, silver, it's all about the monthly, tightening monthly range over the last 6 months. Daily RSI, almost oversold. That's where we bounced from last time around. That's where we bounced from back at the end of March. That's where we bounced from back in September. Got real ugly in March. That was COVID. Since COVID, this is where we bounce. Maybe a little bit lower, but you get the idea. Miners, weekly bear flag confirmed. Not a lot of follow through at this point, but I would need to see, again, green days, multiple green days in a row, if I'm going to call it a weekly bear flag with a lack of follow through. Oil, 4-hour bear flag confirmed with a lack of follow through. So a trade that I have been practicing a lot lately is recognizing flags that confirm with no follow through. And the cryptocurrency space has been helping me get good at recognizing it because they do it all the time in both directions. But we know the natural gas weekly time frame did it. Here's your weekly bear flag, and that marked a massive multiple month run. Confirm the bear flag with zero follow through. We did it here as well. Little weekly lower high, lower low, straight into a bull move. But this was the most clear example. And oil, so how do we play that? So zooming in, 15-minute time frame. This is our 4-hour support level. We top out on the bounce. A 4-hour lower high is set. And the break of 65.56 support happened on one 15-minute candle. We were under that support level for a total of less than 15 minutes. So when you break support and lack follow through and V-shape, what's a low risk trade to try and play that momentum shift? I could recognize, okay, bear break zero follow through. As soon as the pattern of a lower high every 15-minute candle breaks, which happened this green candle, and it happened at 65.93, I can make a bull entry and put my stop under that low. I don't even need to give wiggle room. I would use 64.99, but I don't need to give wiggle room because if we break to a lower low from that point, then I am wrong because that is bear flag and bear follow through. But if I'm right, I'm risking just about $1, and the reward, it ended up only being $1.50 at this point. But my point is recognizing a bear break straight into a V-shaped move in the other direction. Just like a bull flag. You break a bull flag bullish and you start consolidating right away, it can be taken as a bit of a red flag. It just shows exhaustion. This shows me bear exhaustion into that bounce. And I did that with an Mrna trade, which I'll show you in just a moment. Natural gas, all bulls. Just magnifying the difference between oil and natural gas. We're looking at $4 psychological resistance. We're at multiple year highs, and the bulls have complete control on 4-hour and daily and weekly time frames. And this is one from my memory banks because I have never watched this long a term shift. It was the weekly EMAs crossing bull for the first time in many, many months. And then that marked the bottom. So a lesson. Again, I have not traded natural gas since my New Year's resolution at the end of 2019 to not trade natural gas because in 2019 it was one of my biggest losing positions. So doesn't mean I never look at it again. Doesn't mean I have some resentful hatred towards natural gas. It means, all right, I'm not going to trade from you, but I'm going to learn from you, and I'm going to observe you every single day. All right, trade review. So again, I started the day, I had no idea. And in hindsight, looking for bounce follow through, really today was a flip day because yesterday growth led the bounce. Netflix was a lead bull for the tech sector, Apple was a lead bear. And there's even more examples than that, but that's just few. And then today, growth was a very slow, it was a lead bear first thing because we opened higher on growth and then pulled back all morning. Netflix was a lead bear. Apple was the lead bull. The weak bounces from yesterday in cruises and airliners saw big time follow through today. And obviously, the financial sector was completely opposite today as well. There were a lot of opposites as far as what happened yesterday and what happened today. So, in hindsight, playing that bounce in airliners and cruises would have been a good setup, but I wasn't ready for it, so I didn't take any of those trades. And the first trade that presented itself to me was XLF, and I was just looking for a short, and I was looking at a gap fill. So gap filled at 36.04, and I was a bit patient. We were running real hard all morning up to that level, very overextended, and I waited until this 5-minute bull flag confirmed so the price would get closer to where my stop level would be, and I just did my normal scale in. So I made a first entry at 36.02 just in case we filled the gap and then pulled back. I was looking for a 15-minute consolidation. That's the target for my trade. The 15-minute time frame at that point is due for consolidation. We've set a higher low every single candle. We've made a massive move. So I entered one position at 36.02 and a second position at 36.09. And my stop goes at 36.15 because I only wanted two positions, and as soon as my two positions fill, my stop goes in place. Fortunately, my second entry was right near the top, and we then pulled back. So I anticipated we were going to hold 2-minute EMA 12 because we've been holding it all morning. So knowing that I'm maxed out on my position size, I target to exit my first position where I bought it. And I exited half at 36.02. So now I'm only in a half position. I've got another half position that I can reload if I want. And my break even is 36.09. So I let this play out. I said, okay, this looks like a 15-minute bull flag. And it was. And so I exited the trade with I exited 25% more when it looked like a 15-minute bull flag. It was actually 35.97. So I had a good exit of that little piece. And again, it was just noticing, okay, bears aren't proving anything. I'm going to exit a little bit more. And then when we saw the 15-minute bull flag confirmed, I exited the last quarter of my position by being stopped out. And it was a small win. Uneventful. In the end, maybe a third of a day maker. Yeah, probably. Third to 40% of a day maker. But starting the day off on a little win. Next trade was AMC. And AMC, this one made my day. So here's one. So first things first, pre-market. Again, I swung TLRY. I exited it all pre-market 1380. I swung NVDA. I exited half pre-market. I exited the other half right after the bell rang. NIO, I exited half pre-market. I exited the other half right after the bell rang. AMC. I exited AMC pre-market at 35.80 or so. And that was a nice win. I was very pleased with my swings and starting the morning off with a lot of wins. Not big wins because the position sizes weren't large, but enough to be up, a day maker plus to start the day. So AMC, and then it runs. And in hindsight, I don't have any regrets selling pre-market because I wanted to start with a fresh, clean slate and clear my mind. And I made a good decision selling everything else because everything else dropped notably lower from where I sold it. Didn't necessarily end up that way at the end of the day, but I know I would have regretted it if we pulled back all morning and I didn't take any profit pre-market. AMC was the one where I should have held on to it. But again, if 3 out of the 4 I made the right decision and 1 out of the 4 I didn't, that's fine. But the point is, I recognized a 1-hour cup and handle setup on AMC using extended hours because we topped out at 39.87. I didn't participate in any of this run from 35.80 all the way back up to 40. Didn't get any of that. I saw the hourly consolidation. I said, that looks like an hourly bull flag. I recognize this double top of resistance. This looks like a cup. If this is a bull flag, this is a cup and handle. So I make an entry. I'm looking for an hourly higher low. What is the indication that an hourly higher low has been set? A 5-minute trend change. So I look at this bounce on the 5-minute time frame, And I say, okay, if 37.90 is our hourly high or low, it's an hourly bull flag. This bounce is big enough to create the space. And again, I'm not measuring it with any tools, but I can visually see if this bounce is big enough for me to scout a 5-minute high or low to try and set up the trend change. And I posted that in the chat room. I'm looking for a 5-minute high or low, and then I took my eye off it, and I looked back right at the right time because it was this red candle, and I made my entry at 37.20s, 38.20s, and I put my stop at 37.79 maybe. Gave some wiggle room. And from there, that was it. I just let it play out. If it's an hourly bull flag, I'm right, and it's a big win. And if it's not, I stop out, and that would have been a quarter-day loser if I had stopped out. Normally, I sell half of my position. You know my style. But because my risk was low, I had a good entry, I let the whole position play out. And then we got the bulls into the end of the day, proving the bull flag and proving massive follow-through. I exited half of the position in the upper 41s, and I still have half that position. AMC looks like a weekly high or low is being set, and we're anticipating an equilibrium is the most likely scenario. So a clear shift, the scales tilted between supply and demand with the big red or the big green day today. What happened? A daily bear flag with no follow-through. The point I want to make is I exited pre-market at 35.80. I rebought at 38.20. So I rebought 6% plus higher than where I sold it. And normally, in my early days of trading, again, psychologically, you think I would never rebuy 6% higher. I made a mistake. I shouldn't have sold, and I would be pouting and upset with myself, and I'd watch this entire move play out and think about what a terrible person I am. But when you have the experience, I don't care if I rebuy higher. If the trade setup is there, and if I have a low risk, and I have a clearly defined small amount of risk and a large amount of reward potential, then I'll take that trade every time. Doesn't matter. As soon as I sold 35.80, that trade no longer exists. It might as well never have happened because I am back to a completely fresh, clean slate, and the only thing I care about is how much can I make on this next trade. So I didn't care at all about rebuying higher. It didn't cross my mind once in terms of, well, this is 6% higher than where I sold it pre-market. Wasn't even a factor in the thought process. So the point is, wipe your memory clean. Learn your lessons. Don't wipe your lessons clean. But the previous trade has absolutely no implications on your futures trade. And I posted on Twitter an interview with Giannis, the Greek freak from the Milwaukee Bucks basketball player. And he was talking about the same thing. You know, for him it was keeping your ego in check. Doesn't matter about my previous successes. Doesn't matter about what I'm going to do in the future. What matters is right here, right now, in the moment of that game. And I suggest you go back on my Twitter sometime within the last 3 days. I think I posted it over the weekend. And just watch what he had to say because it completely applies to what I just talked about. From there, Mrna. And I fumbled this one and then recovered the fumble. So I'm in the chat room posting, first off, congrats to the Bulls. This has been a massive run. But Bulls were looking for a top. And generally, I don't like shorting blue sky breakout. It's just a general rule of thumb. I'll do it every once in a while. But for me, it's just so much more likely to get stopped out trying to short a blue sky bull than it is to nail the top. So that's my mindset approaching the trade. That being said, there's an opportunity here where the size of this 5-minute pullback shifts the most likely scenario to being a 5-minute lower high. So there's a potential top fish play. And I'm just going to pull up. Again, it's best to see exactly what I was saying to know exactly what mindset as it was playing out. Bear with me one moment. So this is everything I said about Mrna today. Aggressive Mrna bears are watching for a 5-minute lower high versus high of the day to top fish at 11:32. So at that point in time, 11:32. So I see the size of the pullback. We're right here. And I say, okay, we're watching that 5-minute lower high. And I entered a short. 539s. And I fumbled placing my order. And if I had just, really what it was, my position sizing, all right, I'm breaking it down right now as I'm speaking. My position sizing was too large. And the bid and the ask spread threw me off a little bit because it was a fast mover and there was a wide bid and ask spread. And I took on more risk than I wanted to on my position. And I haven't been watching Mrna trade at all. And so it's a completely new ticker, and I'm in too large a position. There's too much risk. I don't want to risk a day loser on this top fish trade of a blue sky breakout. I want to risk a quarter of a day loser, but not an entire day loser. So I entered, and we double topped at the high of the day. And so psychologically, I'm saying, uh-oh, too big a position. This ticker's new to you. What are you doing? And so when it came back down a bit, I covered at a loss. So 539 and change short, I probably covered 541 or 341 here. And it was a beautiful double top. So Mrna double top high there. So even in the chat room, I'm posting, the mindset of a bear and everything's going according to plan. But for me, it was not going according to plan. So I exited with a loss, and that was probably a 40% day loser. And then we rolled over and absolutely waterfall dropped. And that's the market saying, okay, your all-time high is now set. And it's being added to the S&P 500 tomorrow, I believe, so a potential sell the news type reaction. But I'm not going to kid myself and think that I would have held through that entire drop. But I didn't beat up on myself and think about what a terrible person I am. I watched this dump. I played the bounce. Scaled in a little bit too early, but it wasn't too bad. And I was just watching the 1 minute time frame get really extended and ended up with a decent little win on the bounce. Nothing notable. Probably made back my loss on the short. And then we knew to look for a 15-minute lower high. So scouting the 15-minute lower high at 1:51 p.m. and I was wrong. So I didn't make an entry, but I'm just saying, this is what I'm watching for. So I know I'm looking for a 15-minute lower high, and it was right here. And again, it was the same thing, the same reason I scouted the 5-minute lower high at the top. Size of the pullback had me watching for this to potentially be a head and shoulders. This candle right here told me that's probably not likely. Aggressive, no, I forget where I said it. But I could tell after that 1 minute candle, I said, probably not. Bulls have a really solid candle. And so we broke resistance and we kept that march going. So we know we're looking for a 15-minute lower high. And then we got another opportunity. So nice bounce, nice bounce. This pullback right here. So what is the most likely scenario on the 2 minute time frame from here? A lower high compared to the high of the day. So you can top fish or compared to the high of the bounce. If I feel this is a 15-minute lower high, I am going to enter bearish on a 2 minute lower high and put my stop over that level. So aggressive Mrna bears scouting a 15-minute lower high are looking to do so with a 2 minute lower high. 2:06 p.m., which was, again, before the bounce even starts, I just can see this is a big enough pullback to scout that lower high. So then it sets and it backtests and rejects from the EMAs, and then we roll over into a new low of the day with very significant bear gains. So I had a decent short there. Again, I didn't hold for the new, all the way down to the new low. Then I started recognizing bear breaks lacking follow through. We broke the low of the day by 1%, and 1% on this name that just went 10% is nothing. 1% bear break low of the day into a little bounce. New low of the day by less than 1% into a 4% bounce. So that had me scouting a falling wedge. So I was playing these bounces. Every time we hit a new low of the day, I buy and I just flip these little short-term bounces. So again, it was a low of the day at 298.12. We broke it by just over $1 straight into a 3% plus bounce. I'm not sure where else I'm looking here. But I was playing those little plays from there. Okay, what's the most likely scenario? I'm scouting a falling wedge because bear breaks are lacking follow through. We're down over 10% from the high of the day. Then on this bull break, I was done trading by here because I was about to live stream, but somewhere I posted about the inverse head and shoulders. Mrna falling wedge, watch as bear breaks don't have much follow through. Forget where the other one was, but there was one more talking about the potential of a inverse head and shoulders on the 5-minute because we rejected from the downtrend resistance line, but it was enough space for the 5-minute higher low, and there is your inverse head and shoulders with a big bull move of follow through into the end of the day, and there's your top fish knowing a 15-minute lower high is potentially approaching, and a 6% drop rejecting from that resistance. So the bottom line is there was a ton of opportunity in both directions. If I could teach a class about this one trading day as far as all the different patterns that it gave. Top fishing plays, inverse head and shoulders, falling wedges, bottom fishing plays, and just beautiful volatility all over. So into tomorrow, we're scouting an hourly lower high to be the most likely result of any bounce from here. We're just sideways with inside bars. But if we open higher tomorrow, we're scouting an hourly lower high, and then the bears must break the low of today to confirm an hourly downtrend and confirm daily consolidation is underway. And then we're scouting first hourly oversold conditions when we scout a daily higher low. So after fumbling Mrna and having a losing trade, that was my first losing trade of the day, made it back, and then some. And that was my, it ended up with probably a 2.5 to a 3 day maker just from Mrna. Well, no, I take that back. I forgot AMC. Probably a 2 day maker from the Mrna trades in both directions, but mostly bullish because, again, I favor those oversold bounces and I love falling wedges. I'm done talking. Feel free to ask any questions. We'll do a Q&A sometime soon. I've got stuff coming up here. Maybe early August. We'll do an AMA and I'll give you plenty of advance notice. Do good things. Have a good day. Man, I'm really pumping out the videos. Thanks for sticking with me. The time, that's too long. I'm making bone broth soup. So I come out here and grab a little bit of everything. We're going to do first potatoes of the year. It's like a treasure hunt. Oh yeah. These were the smaller plants. I don't think there's many potatoes. Oh man, that's the seed that it came from. So that was planted 3 months ago, and it's just the foulest smelling, decomposing. There's nothing worse than getting a handful of that goo when you're pulling up these potatoes. And I used to work on an organic farm, and I hand dug 400-foot rows of potatoes, and you would just get one of those every now and again, and it was something special. So not very big producers. Those were Yukons, I believe. These are some kind of red version, maybe Adirondack red. Let's see if these are more prolific. Looks to be the case, so that's notes to make for next year. That's 2 plants versus 1 plant.